Stocks posting their worst day in more than 5 years. The NASDAQ.
The latest.
Kelly, we've got new reporting now from NBC News reporting that the president is about.
Stock market crashes happen in any era. However, investment guru Warren Buffett has made the following comment.
Buy something that you like at a price you like and then hold it for 20 years. And you should not look at it day to day. If you bought a farm or apartment house.
Don't panic when stocks get slammed. Today I want to look at some advice from CNBC.
We're down at 27.15. When I came on 5 minutes ago, we were at 27.30. So we're down another 15 points in 3.5 minutes.
There are always going to be dark days in the market, but the worst thing you can do during them is sell. Panic selling has never worked out. Remember what Warren Buffett once said, when others are greedy, I am fearful. When others are fearful, I am greedy.
The stock market's going to advance over time. American businesses are going to be worth more money.
For long-term investors, selling on panics has never been a good idea. Just look back during the financial crisis.
Everybody believes there's a rally that's coming simply because we're so dramatically oversold.
The market had bottomed in March 2009 after everybody had panicked.
So who's still selling that's out there? The biggest thing that I can see is that the retail people are continuing to sell. That's your average investor, okay?
Those who stayed in saw their holdings double over the next year. In early 2018, the market had gone into correction.
The Dow plunging as much as 400 points today, worst decline of the year by far as the first major sell-off of 2018 intensifies.
A lot of people started to freak out. They sold. It didn't work out for them. 6 months later, the market had regained all of its losses and then. The truth is, when we've seen these big pull downs in the market, when we've seen this big panic selling, they almost always historically have been buying on. Of course, we know that any dip could be the beginning of a bear market. So it's always good to check fundamentals. If the economy is strong, if corporate earnings are still good, there's nothing wrong with rebalancing your portfolio, but make sure you're sticking to your investment objectives and you're not investing on emotion. Look, there's no doubt it can be gut-wrenching, and when you look at those losses on paper and you see your 401k become a 201k, that can be really tough. But the important thing is to remember to keep your long, stick with your fundamentals, stick with your goals. That's how you're going to make money